Hey everyone, this is Justin from LitTube channel, and I'm back with Phil for another night of fun here.
That's
And
right.
we're gonna flip the roles this time, and this is gonna be more of a Phil interviewing me on a topic that is fresh in his mind. So, what do you got for me tonight, Phil?
Well, Mr. Holden, I was doing a lot of reading about the stock markets today, particularly the Dow Jones Industrial Average, I believe it's called, and they made a comment about how it's propped up on hope, and that is what I discern in thee, my friend. It was the text you sent me. I got to pull it up here. I was. This is what prompted my kind of idea.
Okay.
I won't read it all out here. Since you sent it to me personally, but you talked about putting money in a Roth IRA, and hoping, here you can use the word hope, that in a market downturn, you could somehow live off the income from dividend payments. And because I don't quite understand what all that's about, I wanted to understand what what you're thinking with what you wrote and why.
Okay. Well, I'm going to preface this by saying that as far as what I'm doing in the stock market right now, I'm not putting any fresh money into just like my normal brokerage accounts, which is like separate from your retirement savings. So I'm not doing that. But I am still going to continue to add to my Roth IRA because the way I look at it is retirement investing is like a long term buy and hold strategy for the most part. And so if you're investing in your 20s, that's money or assets you're not going to touch in theory until you're like 59 years old. So that's a long time horizon to work with. And so my line of thinking is that yes, I do think that the economy and the market's going to crash relatively soon. It kind of already did, but then there's a bit of a rally and it came back. But I guess what I was trying to communicate to you in my text is that even if a worst case scenario happens as I see it, and like I'm at retirement age at 59 or 60, and then it's just like, oh, it crashed again. What I'm trying to do with my portfolio is have it so that I'm only investing in individual stocks or funds that pay dividends or distributions. If it's a fund, they consider them like distributions. But and I don't know how familiar you are with that stuff, but it's basically like that's when you get a cash payment from the fund or the stock that has nothing to do with the stock price going up and down. So that's basically what I was communicating to you in that text, is that that was kind of what my strategy was. And there's a lot of people that, well, I shouldn't say a lot of people, but I know of some people that subscribe to this whole buy and hold and never sell, with the idea of, okay, I'll just reinvest. Like I won't automatically reinvest the dividends. I'll just let like them pool. And then when everything goes lower, I'll buy more and just keep buying more when it's low. And then, you increase your dividend yield over time doing that, your yield on cost and your overall cash yield. And then, of course, if you happen to be lucky enough to retire and the market's on top, then you can sell your assets and then have even more cash.
Okay, so what I wanted to know then, because I mean your worst case scenario is obviously not as bad as my worst case scenarios that I think through.
Yeah, well, that's where the disconnect might be here.
Well, exactly. That's what I'm trying to figure out how this stuff works, because you made a comment in there. I'm only starting to learn all this stuff. And by the way, that's what I sold. I had a Roth IRA. That's what I sold 9 years ago. Don't have any of it left, but at least I got to spend it. That's another story. That's actually lots of stories. Um, but you said it would keep paying out dividends or something, no matter
Yeah,
what
well, let me give you an
it
example
does.
here. Let me give you an
Yeah.
example because I actually looked this up before we did our video tonight because I kind of was thinking about this and wanted to get more data on it. And this gives you an idea of showing you that the market right now is overvalued, even irrespective of the pandemic that's going on affecting everything. Because
Yes, we're going to talk about that. Yes, tonight.
so I was looking at like what's the current dividend yield versus for the S&P 500 versus like what it used to be. And so the average, the mean dividend yield for the S&P 500 dating back to like when the stock market first started back like the late 1800s The average has been 4.32% dividend yield. The median's been 4.27%. So they're pretty similar. The minimum dividend yield was in August of 2000 when it was 1.11%, and the maximum was 13.84% back in June 1932. So I believe you're talking like around the time of the Great Depression back then. Or no, not quite. That's after the Great Depression.
1932? You mean well? It was during the Depression. You mean after the crash?
Right. So that's when the dividend yield was at its highest. See, the thing is with the dividend yield is that it kind of is like an inverse relationship with like the stock price. When stock prices are high, the dividend yield is low, and when the stock price is really low, the dividend yield is high. So like that's how you get a higher yield on cost by buying low. And right now the yield is at 2.08%. So that's significantly lower than the median and the mean for our historical data that we have here going back to like 1880. And then the other thing I was looking at was the PE ratio. And I don't know if you're familiar with that, but that's like price to earnings.
Yeah, I've heard of that.
Yeah. So right now, the PE ratio for the S&P 500 is 20.53. The median is 14.82. So again, that's an indicator that we're overvalued right now. We're not even at the median or the average. We're above that in a market where businesses are like all closed down and stuff. So it's really cool.
That's okay. I did the math earlier today. I know.
Yeah. But I guess what I'm also trying to say with this is like, because I think what I told you was, I'm going to like contribute the maximum to Roth IRA every year if I can. But I haven't done that yet for this year. And I think I'm going to just go wait until the market like goes down more is kind of what I'm thinking. Because I don't want to like put it in and invest it when I think it's like a little overvalued.
Okay. Well, thank you. I want to, we can get back to more of that later with more of the specifics because I'm curious of how all that works. But since you've asked me about how I feel about the market, I'm curious how you feel about the market and about and particularly the DJIA or I mean, I guess that specifically, or I guess you have a lot of things in the S&P 500. I looked at the Dow Jones today. I was wondering what you thought the future was going to be for the stock market in general over the next months and years.
Well,
yeah.
I think a lot of people that try to forecast this stuff will have like a worst case scenario, a base case scenario, and like a bull scenario. You know what I mean?
I have that. I have that on this paper for the Dow Jones.
Okay. But yeah. I think like when I start looking at it like more pessimistically, and I guess as more of a realist, I'm looking at the fact that the current crisis is obviously really bad. You have all these businesses that are shut down and like we're like waiting for when they're going to be able to reopen. That's really bad for earnings. It's really bad for unemployment. It's really bad for the economy in general. There's the oil crash. You and I talked before in another video about a housing market crash coming. So there's really not a whole lot of reason to get excited and think you're going to make a ton of money in the stock market in the short to intermediate term. Longer term, I think the bigger risk, which we also talked about, was if we get into some kind of debt crisis where there's like hyperinflation of the dollar or something like that. So those are the things I'm looking at that concern me. But again, like I told you, I'm not investing right now just for like speculating, trying to make money in the short term. I'm putting it in the retirement account with the idea of this. I'm not going to touch this money till I'm 60.
Okay.
So my thought is, even if in a worst case scenario, I'll be able to weather the storm by the time I'm 60, everything will be done with. That's the hope.
Your storm would be my best case scenario. Okay. I was curious. I'm trying to get trying to feel the pulse or whatever, like a Jordan Klepper show they used to do. I forget what comedy show that was. Well, I did some research on the Dow Jones today, and I found out some interesting facts. and I'm kind of wondering how you would I don't know what you think about these, about it being, I guess about the stock market being overvalued, and like what you think the possible consequences could be. I was trying to think what was the best way I could ask you this question. But I might just state facts, and I'm also trying to figure out how far back I want to go. I'm kind of rambling, unfortunately, because I wasn't sure how we exactly do this video, but I don't think it really matters anyway. We're still practicing. I found a very, but I guess I'll just say this. I found a very interesting fact today. I looked at, and I should send you the link where you can look at the Dow Jones value, also with a graph that also shows inflation.
Yeah, we can put it in the description of the video.
Yeah, this is worth checking out. So I was looking at the peaks and the troughs. Is that how you say it? The lows? I forget. They call it peak and trough.
Yeah.
So I found a peak was December 1965. And I want you to guess what year it dipped. It did I guess a U or a V, and it crashed in I looked it up in the early 70s, but it started crashing in 1965. Guess what year it finally, when you adjust for inflation, guess what year it finally hit that level where it started going up again. 1965 was the peak, and then it went down. Guess what year it started to go up again when it hit that same level it had been in 1965, adjusted for inflation?
1978.
Nope. That's a good guess, though.
All right, so what is it?
Yeah. Wikipedia says 1993. I looked at the data myself, and I found 1995. So I'm not sure if I looked at the numbers correctly. So we hit a peak in 1965 on the Dow Jones. I'm only looking at the Dow Jones. And sorry, I was wrong, not December, July. And according to the graph I looked at, when you adjust for inflation, the market didn't hit that level again until 30 years later, July 1995. And
can I make a point, though?
Yeah, go ahead.
Because I hear you say that, but I'm kind of paraphrasing someone that I have had contact on that Seeking Alpha website, because there's this older guy that's like, I guess already retired, and like he owns stocks and stuff, and he goes by like I think his like username on there is like buy and hold 2012 or something like that. And like I remember him saying on that website that because someone made that kind of same point of like, okay, if you had invested in this year, it took you 20 years to get back to this point, right? And he was like, well, no, only the worst investor would have done that would have bought at the high point and never bought again. So he was making the point of what you should have done if you're in that situation is continue to buy over the years, and then like, you're making more money that way than just like buying once and then waiting for your money to get back to neutral.
Well, here's my thesis that I am in the process of developing. And I wrote this on a YouTube comment the other day. And I put this date down because I think when you adjust for inflation, it was the trial, but I'll have to look at the data again, the numbers. I like saying data. Actually, it's datum, the datum, because it's one point of data. I believe that this economic crisis we face, we look back, housing market crash, dot-com bubble crash, was it 87 was the crash they talk about, the biggest day of drop for the Dow Jones? I believe, I should say my hypothesis is that we very well at this moment might be undergoing a crisis that is 37 or 38 years in the making. Back in I think it was July 1982, because I think that was another trial. I believe, but I can't remember why I wrote this number down. See, that's my like main kind of operating idea right now, is that this is not a normal, you know, this isn't the early 70s, this isn't the early 80s, this isn't 87, this isn't the late 90s, this isn't, you know, the year after 9/11, this isn't 2008. This is now like, this is the big thing, because of over leveraged everything since at least 1982. But that's just kind of my working hypothesis at the moment. That's kind of what I wanted to share tonight, based on the numbers I have here. Yeah.
So, I mean, what are you trying to say with that? That like we're about to experience the biggest crash we've ever had?
Exactly. And I say that because, and I mentioned this in the text message, when you look at it, you know, and I'm not sure they work it all out, but when you look at like inflation for the US dollar versus, I would call it inflation. We don't, you know, we talk about, it's very frustrating. You know, it's kind of got to rethink, you know, rework the way you think. We talk about, oh, the dollar's inflating in value, but we don't think about, oh, isn't the stock market inflating in value? I mean, you have here, I wrote here, I mean, if you look at, if you look at, we'll just say the high, and we're gonna look at absolute, you know, values here. The high, the last high we had was February 12th, my half birthday, 29,551 and 42 cents on the Dow Jones. Okay, the high before that, I mean, when I say high, like the peak before, you know, went down or up, October 2007, $13,930.01. So you're going to tell me that, not, I don't mean when I say you, like you specifically, but anyone, all right. So the market more than doubles from October 2007 to February 2020, okay, more than doubles. So that's 100%, probably like 110, 120%, I would call it inflation of the Dow Jones. But the dollar itself only inflates by, I think I looked it up, was 19% or 20%. So you have the stock, the Dow Jones, inflating 6 times the rate of the US dollar. And I bring up 1982 because it's the same principle, is that it's not that this is a recent phenomenon, it's that the market, specifically the Dow Jones, has been inflating at a much higher rate than just general inflation, not for 10 or 20 years. I mean for 30 or 40 years. Actually, I think I would say 1982. I think 1982 is kind of when it really started. Yeah. That's just my main point. So, you know, take it for what it is.
Well, but the market historically has always like trended in a positive direction, right? I mean, it has its like crashes, but
it didn't.
Upward.
It didn't. There was actually something, I saw it today. This is, and that's why I said you don't hear this on the news, because people don't look in the past. And again, you know, there's lots of there are very, very, very many variables. So this is a very kind of open-ended, unspecific look at the issue. But I think you can, you know, kind of determine, you know, general trends. But there was a time period, and I got to find it, where if you look at what I said December 1965, and you go to September 1974, so that's 9 years. When you adjust for inflation, the stock market, the Dow Jones value actually dropped for a straight 9 years, 65 to 74. The value, when you look at inflation, the value of the stock market actually dropped. And actually, I think the absolute value, I have to look at the graph again, the absolute value dropped as well from 1965 to 1974. Actually, let me pull it up real quick. It was it's not what I wanted. Sorry. Yeah, so from 1965, even if you don't adjust for inflation, 1965 to 1982. Yeah, 1965 to 1982. The stock market basically, the Dow Jones didn't budge in value. When you look in absolute terms, that's what I have here. That's what these numbers are for. Okay, so the stock market was $969.26, December 1965, the Dow Jones. Okay, it wasn't until October 1982 that the Dow Jones hit $901.31. So you had 17 years. Again, this is not adjusting for inflation. This is the absolute value. So the stock market pretty much didn't budge for 17 years while inflation was increasing. And I think that we are going to see that happen again, but possibly on a much larger scale. But that's going back 3, 4, 5 decades.
Well, I'm kind of curious because we talked earlier about base case, bull case, worst case, and I'm kind of curious what your worst case is, because I kind of told you what mine is, how it's like, okay, my worst case should be just the market, has a downturn when I'm trying to get to retirement age, and we go through those crashes that I mentioned, but ultimately everything comes out okay. But are you, I don't know if you're forecasting like some kind of Armageddon where like businesses don't exist anymore, or like what?
So this is what, okay, so I'm going to keep my comment here within the realm of not anarchy. And I do this because I already watched a video today and I forget the name of the guy in the company. He's predicting millions of people in the world starving to death over the next few years because of what's going on. So that's another topic. Assuming there's no anarchy in the United States, and inflation doesn't change, I guess I would say, if someone were to ask me, what do you think the true value of the Dow Jones is in 2020 dollars? I would say the true value of the Dow Jones Industrial Average is somewhere between $3,500 to $5,000. So my worst case scenario in terms of not anarchy is that the DJI falls to somewhere between $3,500 and $5,000. And I actually believe it will. Adjusting, keeping up, even if the federal government or the reserve keeps pumping cash into the economy, I do think that by adjusting for inflation, that is what we're going to get to, because what I have here is basically the number I have here. Here's the number I came up with. I think this was the 1974 number. So the value of the Dow Jones Industrial Average in 1974 in 2020 dollars is $3,100.74. That was the value of the Dow Jones in today's dollars in 1974. And I strongly believe that we will return to that at some point.
Well, I think someone should run the figures on that, because I'm kind of curious what the dividend yield would be at that point on the Dow Jones.
It would be interesting, and I would have to get more into the technicals. But I think it probably doesn't matter.
Probably doesn't. Of course, the other thing with dividends is that they can be cut.
Yeah.
Like that's the thing. Like the cash payments aren't like if of these companies, if you're forecasting them to lose a bunch of money and like not be profitable, they're not going to be paying out dividends the same way.
Yeah. That's what I'm saying. That's what the market was worth in 1974 in today's dollars. That's not me saying that it's exactly going to happen like that, but I'm saying that I believe we are on, if it isn't now, it's going to be in 5 years or 10 years. We are on the trajectory to that point. Again, in 2020 dollars, if we have like 100% inflation in 5 years, well, then obviously it would be $6,200. You understand what I'm saying? Yeah. That's my opinion. Yeah. That's my prediction. Yeah. My best case scenario for the time being would be the Dow dropping to 17,000. The Dow will definitely drop to 17,000, below 17,000 within probably 3 months. Yeah, I mean, again, we're ignoring inflation, but in 2020 dollars, the Dow will drop below 17,000. I think in 3 months. Yeah.
What other questions you got for me? You didn't even ask me about what my investments are in or anything.
Oh, I didn't know how much personal stuff you wanted me to get into.
I mean, I don't mind talking about that.
Tell me what you got. Yeah, I'm curious. I am curious. I didn't know if you wanted to talk about it.
Okay. Well, I won't give like exact like figures or anything, but I will tell you that right now within my
Let me get my pen. Go
yeah,
ahead.
I can start giving you some tickers if you want to look into stuff. So
3M,
my
right?
retirement account is right now split between and again, I just started doing this like a year or two ago, so I'm very very early on in this whole like retirement investing journey.
This is your Roth IRA you're talking about.
Right.
Okay.
So I have a mix of like individual stocks and real estate investment trusts, and then I have funds. And what I want to do is get my investment mix to higher in the funds because that's more like stable and safer compared to just individual stuff.
Mm-hmm.
But right now I have the following stocks and REITs. I have Prudential Financial.
Yeah, actually, I'm going to write this down.
And you probably heard of them. They do like life insurance and other types of like insurance, and they're like a financial company. I have Molson Coors, like the brewing company.
Coors. Oh.
Yeah, Molson Coors. I've got Discover Financial Services.
Discover.
Yeah, they do like the Discover credit cards and loans and stuff like that.
Yeah, I know. I got one.
I've got Monmouth Realty. That's the REIT I was telling you about before. That has like FedEx and Amazon's warehouses, stuff like that.
Yeah, I remember that. Yeah,
they're like a commercial landlord, basically.
Yeah.
Simon Property Group, which is that's my mall REIT. They own Arundel Mills along with a bunch of other mall-related properties.
Okay.
I've got Federal Realty Trust and Kimco Realty. Those are both like more like shopping center, strip mall type of real estate companies. I've got EPR. That's another REIT that and this one's getting hammered right now, by the way, because they invest almost exclusively in like experiential real estate, meaning like golf courses, movie theaters, stuff like that. Yeah, that one's not doing so well, but they have a lot of liquidity. So my hope is that they can kind of weather the storm that's going on right now with the coronavirus. I've got Digital Realty. That is another REIT that has data centers. So they're more like technology based. And then I have Public Storage. So that right now rounds out all of my stocks and real estate investment trusts. There's like individual in there. And then I have my funds, which are I've got the Vanguard Total Stock Market funds. That's all like
Vanguard.
That's just U.S. stock in that one. I've got and I've got a few that are like international stock funds by either State Street or Schwab. So those ones are investing in like the developed markets internationally, like large cap, small cap, mid cap, or actually not mid cap. And then I have Vanguard Small Cap Value. I've got an international real estate investment trust ETF by Vanguard as well. And then the other one I have is the Emerging Markets Dividend Fund by Wisdom Tree. So I think my investment mix is a lot more international than probably most people's. I think most people probably have the vast majority of their stuff in like U.S. stocks and bonds. But mine is a lot more like diversified country-wise. I'm basically making a much bigger bet on like the international markets as opposed to just U.S.
Yeah. That's interesting. Yeah, you definitely have your priorities, and I have my priorities, and they are very different. It'll give me a chance to learn to learn what's going on with these things. Now that I check the market continuously and oil prices and all that. But yeah, I did want to know. I just didn't want to
Well, and I don't pretend to like know everything and like know what I think exactly what's going to happen, but I guess I'm pretty confident that businesses in general aren't just going to collapse and have everything go to zero in value. And so with that being my thought, it's kind of like, well, if things get lower, I can just continue to buy while it's low, and eventually, hopefully everything recovers at some point down the line.
Yeah. D'accord. Okay.
You don't seem convinced, but
bro, I sold all my stuff 9 years ago. You know that.
well, I mean, in fairness, I intend to at some point probably make some invest in some precious metals, like some physical metals that I can carry on my person. But I'm not there yet, Phil. I think that, and you even said yourself, like we're going to get deflationary before we get the hyperinflation stuff going. So, I mean, what's the rush?
Yeah, timing. The rush is it's like when I went and bought all the food. It's half of it's a mental thing, and the other half is that you just don't know. You just don't know.
But I think my whole approach to this thing is a lot more diversified than yours is. I think what you're doing is making a big bet on like precious metals and like having enough food supplies, whereas mine is more of like, I'm gonna have like some stock, some cash, some precious metals. I'm trying to not put all my eggs in one basket, if you know what I mean.
Well, I mean, if you want to look at the way I'm, and unfortunately I don't have as much money as I wish I had, but that's another story. Yeah, no, I'm definitely not diversifying my cash assets, so to speak. But I don't believe in retirement. Even in an ideal world, I mean, in an ideal world, I wouldn't be, trying to buy a bunch of precious metals. But I don't necessarily believe in retirement. And I have my side hustles anyway. And I know they'll pay off eventually down the road. But we're going to talk about those another day.
Like what? Investing in your cigarettes?
Oh, no. I don't mean that. No, like, studying linguistics and studying the Bible. I know it's gonna pay off. I know it is. I know it will. Yeah, I know it will. Makes me a lot of enemies.
But are those side hustles that like cut you a paycheck?
You sent me the video of the Book of Eli, man. We want to control more than just this one town. We need that book.
Yeah, you're you're really taking this whole thing to a whole other level, aren't you?
I know I am. But you'll say we'll see. Yeah. Oh yeah. If you really, I mean, if you really, I mean, I do have kind of a timeline that I'm currently working out, but I do think within 3 years we will. I mean, the one thing, and it's the word that people, I mean, there's multiple synonyms for it. I think it's the one thing that people don't want to talk about, and it's the thing for which I'm really preparing, and that's war. I'm preparing for war. Yeah, I am.
For what, civil war?
In the United States, it would be just rioting, at least to begin with, and it will happen. It will happen. In 3 to 5 years, it will happen. There's no question. There's no question in my mind. Yeah, we'll be picking up, firearms, and splitting into sides. Who knows? But yeah, yeah, I do.
Yeah. So, do you before we end this video, I mean, do you have any other shots you want to take at my approach to this whole thing, or any criticisms, any additional questions you got for me?
Il fait rêver longtemps pour agir avec grandeur, et le rêve se cultive en la ténèbre.
You'll have to translate that one.
He must dream a long time in order to act with grandeur, and dreaming is nursed in the dark. Thou hast thy dreams, and I have mine. And we'll see which dream ends up being the correct one. Yeah, because it's a vision.
Well, again, what scares me more than anything else is just the hyperinflation scenario, because what I worry about is, like, even if I play it perfectly in theory, like I've got all my cash and like metals and stuff like that. I worry about, like, okay, but what am I gonna do with it? Like, who's gonna take my my silver or my gold in exchange for like water and food without like me getting ripped off? Like that's the kind of stuff I think about.
Oh, well, that's a whole other conversation about how I think I think things will work down the road, because what's going to end up happening is that the governments, and it's already happening now with the food, the governments are going to be feeding the people. And I say governments, I mean in the United States, I mean the county, state, and federal governments.
Like, what do you mean, like food stamps socialized, given everyone?
However, yeah, I don't know how they're going to work out the specifics, but I mean, it has to happen. It has to happen. There's no way. There's no one, and I know you know this, and I know everyone knows this. There is no way, even in an ideal world, that once we finish the lockdown, that everything is going to go back to normal. There are going to be millions of persons in the United States who are not going to be employed. And those persons are going to become dependent upon the government. That is not a question. It's not a question. It will happen.
Okay, but
I don't know what else to say.
Again, that doesn't really like. I expressed to you a fear in which we're hyperinflated, and I don't know what to do with my precious metals. like,
oh,
You know, like, I mean, what are you
When
gonna
I
do
said,
with
yeah,
silver? You know?
I'm gonna eat it. Um, to me, it's a last. It's like a. It just fits in with my philosophy, which to me is knowing when to write off a loss, to write something off as a loss. And at this moment, I have written everything in the financial system off as a loss. I even saw a video today. I forget that something Graham or something where he was talking about how like savings accounts are offering lower and lower interest rates.
Yeah, it's kind of pissing me off, actually.
Yeah. So to me, I mean, what else should I do? That's my question. What else should I do with the cash I have and the cash I'm getting my check tomorrow from the government? What else should I do with it?
Well, it sounds like you're
Get
not
stuff.
you're taking off the possibilities list, investing in the stock market after it crashes.
Yeah. No, I can tell you what I'm doing. And you wanted me to talk about hyperinflation in Germany in the early 20s. I did that. I wrote a little bit about people's testimonies. And basically the people who were the best off in the hyperinflationary period in Germany were the ones who were able to spend their money as quickly as possible before anybody else. And so if the government starts giving us a bunch of money, or if I can just get money from other people somehow, we'll talk about my work situation, another video, I'm sure. I'm gonna try and buy like a car. Hell, I might buy 2 cars if I'm able to. I'm gonna start just buying shit. I am. I'm just gonna buy everything I can. I am. Everything and anything. I'll buy more food. I thought about it. Tomorrow when I get my money from the stimulus, I might buy another 3 months of food. Just to have stuff. Just to have stuff as soon as I quickly can have it. And just hope that I'm making the right choices. That's my investing philosophy. It's not that I think I'm right. It's that I think I'm the least wrong. That's really what it amounts to. 100%.
I mean, it can't hurt to have stuff that people need, you know,
Exactly.
food, guns and ammo,
Yeah. Well, I don't think I'll be.
whatever you
I
want
won't
to
be.
consider
Yeah. Yeah.
first aid kits. I mean,
Yeah.
whatever.
Yeah. No. I thought about. Yeah. I've thought about some of that other stuff because I think regardless of what happens the next few months and years, it's gonna come crashing down. It is. There's no other. I mean, I watched stuff and read stuff about the Great Depression. It was pretty bad. People starved to death in Detroit. I didn't know that. People in Detroit actually starved to death. Yeah.
Did you see the movie Cinderella Man?
No.
That's one you might want to check out because that's going on during the Great Depression, but it's focused on a boxer, and like even he's like struggling through that.
Yeah. 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 That's what I see. Sorry, I'm so morbid. I mean, what can what else can I say? I mean, this is I've been, and we'll get into other. We do other videos and talk to me. I mean, there's a reason I'm the way I am, and it has to do with a lot of what happened 9 years ago, and just the stuff I read, even when I was a child. So, yeah.
Well, I'm sure we'll dig in more to that later. I hope I was able to answer all your questions to the level of detail that you wanted.
Yeah, I was. We're gonna definitely get back to those because we can even do that in the next video. Because I'm gonna ask you more about how this stuff works. Because I gotta think. Because I'll come up with some more. I definitely will. I just have to, sit on them. You know what I'm saying? Remember I talked about Luther Martin? It's the Luther Martin way, man.
Yeah, but I think one of the big takeaways, if you didn't already know this, is just that when it comes to like the markets, it's like the stock price isn't the only thing that matters, right? Because it's also, well, how's the business doing fundamentally? What are they paying out in dividend payments? Like that stuff matters too.
Well, what I would say we should do, and maybe I'll be able to do this, because I agree with you. So for me to really hammer my point home, I would have to start looking at something specific. Like I might go for Vanguard. I might go look to see what Vanguard or Discover. I have a Discover card, to start, calling up customer service and say, I would like to get access to all the financial statements for everything for the past however many decades that you've been around. You know what I'm saying? And we can start. Maybe you want to contact investor relations then. Well, exactly. Yeah. So I can find out. We can find out. Yeah, I think Vanguard. I mean, definitely Discover. In public storage, I'd be curious to find out with them. Yeah. Vanguard, public storage, and Discover, because those are three, kind of different.
But you also have to understand, I'm not invested in Vanguard, the company. I'm just using their funds.
Vanguard funds.
Because it's kind of like, these companies that put out the mutual funds, the ETFs and all that, when you buy that, you're not necessarily investing in the company that's hosting that fund. They're just like...
Oh, I see what you're saying, yeah. Well, I mean, regardless, I would just have to try and figure out the whole thing then. But yeah, no, just I'm worried about Discover. I don't know why, but I am. I'm worried about them. Especially after what I learned today, that they offer for their, I don't know if it's a CD or whatever their bank is, Discover offers the highest interest rate right now, savings accounts. I guess it's a savings account, it's not CD.
Well, do you know why I invested in Discover though?
No.
The reason I invested in Discover is because I wanted to have like a company that issues credit cards. Like I wanted a company like that as part of my portfolio, but I didn't want to overpay for because Visa and MasterCard and all them and American Express and all that, their stocks are like way too high. Like the PE ratio is like way too high.
Mm-hmm.
Discover is like very reasonably priced by comparison. So that I think Discover is an inferior company to Visa and MasterCard. But inferior, yeah. But the thing is, their PE ratio and all that stuff is so like there's so much more reasonably priced from a stock perspective. That's why I invested in them, even though I don't think they're as high quality a company as Visa. But I invested in the lower quality company that I think is trading at a more attractive valuation, if that makes any sense.
This is for your regular investments or your Roth IRA?
No, Discover's in my Roth IRA.
Because I'm worried about Discover today, especially when I found out that they're offering the highest interest rate for a savings account along, I think, with Ally Bank. They're both 1.5%. And, people don't have to pay their credit card bills.
Well, I have an American Express online savings account that's also around 1.5%. So I think they're all pretty similar, actually.
Yeah.
So I'm nice paying.
I mean that anything to me, any, it's just the way I think. Anything that is offering you a positive interest rate is dangerous. Any institution offering you a positive interest rate is dangerous, in my opinion. Yeah, that sounds crazy, right?
I mean, as far as I know, that's always how the financial industry worked. They had to give you some kind of return for your money.
Yeah, unless you have a run on the bank. What if everybody runs on Discover Bank?
What, pulls all their money out?
Yeah.
Well, I mean, exactly. I guess that could happen to any company.
Exactly. Exactly. That's what I'm saying. This is the way I'm a catastrophist. I can't help myself. It's happened before. It was happening in 2008.
Well, on that note, I will just quote a recent Seeking Alpha title of an article that I came across recently. Maybe we should
Yeah,
look it up after this, but
yeah.
I remember the person titled it "Beware the Prophets of Doom."
Beware the prophets of doom. Yeah,
Yes, and
and
I
let
think
me,
they're
yeah.
referring to you as one of them.
Yeah, yeah, and let me quote, yeah, Jeremiah. Yeah, woe to those. What does it say? Woe to the shepherds who heal the wounds of my people lightly. Uh, was it Lemor Shalom Shalom Wa'ain Shalom, saying peace peace and there is no peace. Yeah,
I got to get you to read some of
the
these
book.
articles.
What?
I think
It's
you
a
get a kick
weapon.
out of them.
What you say?
I said I gotta get you to read some of these articles that are on this Seeking Alpha website, particularly from the bulls, like the people that are like, oh yeah, like the economy's humming, it's doing so good. Like
Yeah.
I could get you to read some of those articles and maybe
Oh
drop some
man.
comments on them.
Beware the prophets of prosperity. I mean, it goes both ways. What makes one person right and one person wrong, or
Well,
one person
I
right?
suppose that's a good retort, and I guess ultimately that's what makes a market. You have your
Yeah.
prophets of doom, your prophets of prosperity, and everybody in between.
Yeah. Well, I'm definitely a prophet of doom. I definitely am, and I have evidence for it, and I'm ready to throw down with anybody who wants to say otherwise. Molon lave, come and take.
Well, if anyone wants to throw down with Phil, just drop a comment. He'll respond.
All right. Well, I don't know if there's anything. This is a long video too. No one will probably even watch